Wall Street showed renewed confidence this week in the administration's plans to rescue the nation's troubled banks. But will it last, and what happens now? Joining me now is Bob McTeer, former president of the Dallas Federal Reserve Bank. Nice to have you on the program, Bob. Thanks so much for joining us.
My pleasure, Maria.
You know, the big news this week, the rollout of Treasury Secretary Tim Geithner's plan to stabilize the banks by making a market for those so-called toxic assets. What are your views on this plan?
Well, the devil will be in the details, but I think it has promise. It seems to have incentives for private sector investors with some protection from loss, and I think in combination with some relaxation of mark-to-market accounting, that the two things together can be very helpful.
Do you have a sense of what kind of reception we've gotten so far from some private investors? Are they willing to put money up to actually buy these assets?
Well, I don't see why they wouldn't be, but I don't know that for a fact. I think the incentive is certainly there. They're going to be allowed to have some leverage and work side by side with the FDIC. So I think there will be demand. I think the larger question is whether the prices will be high enough for the banks to want to get rid of them at those prices, because if they have to take a large further loss on them, they may rather hold them on their books.
Right, and then just wait for perhaps another time when they could actually get a higher price to sell those assets. But wouldn't that just delay what we're going through right now? The banks would still have the assets on their books and still have to take write-downs on them and perhaps not lend as much as they would like because they've got losses still.
Getting the assets off the books is a means to the end, and the end here is they want to stop the destruction of bank capital. So if you had a mark-to-market relaxation, or if they could sell these assets at a reasonable price, they would both accomplish the idea of getting them off the books so that capital won't go down further. But it's the capital that's the main problem, not whether or not they're on the books.
Sure. So you think getting rid of mark-to-market is also critical here?
I think it's very important and should have been done earlier, and I don't expect to get rid of it, but FASB has put out some proposals that they're going to act on after April the 2nd, and there is some helpful relaxation in those if they go through with them.
Let's talk about the broader economy, Bob. The fourth quarter GDP for 2008 revised down again. Job cuts were announced at IBM and GM, among others. Is the market reaction to the bank plan a glimmer of hope, or where do you see us in terms of the broad economic slowdown right now? Where are we in this down cycle?
I would have said a week ago that we have a long way to go, and it's going to be very steep, and there are some glimmers of hope out there. I think the stock market's been priced for Armageddon, and I think maybe Armageddon may not come. So while the economy still has a ways to go to start recovering, I think the market can lead it out of this thing. The thing is, the job losses have so much momentum. 600,000 a month. That's got to get smaller before it goes away.
And when would you expect the job cuts to start lessening? We're already at 8.1% of the country unemployed.
Yeah, in the little double-dip recession of 80-82, the unemployment rate got up to 10.8. So by that standard, it still has a ways to go, and I expect it to easily go over 9. But possibly not hit 10.8. We're
in London this week covering the G20 meeting, which is taking place next week. Can anything be done on a global basis? What would you expect out of some of the ministers here in London in terms of approaching the global situation?
Well, I think what each country would do to stimulate its own economy would be helpful for all. I don't think that has to be all that coordinated. What's important is that they pledge to each other that they won't try to solve their internal problems at the expense of other countries, that they avoid any kind of beggar my neighbor policies. That normally means competitive devaluation of your currency, but it can also mean competitive bailouts and rescues. And you know, our Congress has already put a Buy American clause in some of its legislation. Our Congress has already abrogated a part of NAFTA, allowing trucks to operate inside the United States. So there is this tendency in our Congress to want to protect our own and not to care so much about others. And I think that may be common, and they just need to pledge to each other that they're not going to let that happen. You know, it made the Great Depression much worse when they started doing protectionist measures.
Yeah, and I guess each country is showing their own protectionism sides, certainly recently. Let me get your final thoughts on that hearing that we saw last week. Treasury Secretary Tim Geithner testifying in front of the House Financial Services Committee. What was your reaction to that?
If you're referring to the one on regulatory reform, I think it's positive, but I think there's, again, the devil is in the details. Somebody needs to be overseeing the whole system. I doubt that that will prevent another crisis someday, but it's a step that needs to be taken. I know that having hedge funds sort of brought under the regulatory umbrella will be very controversial, but I think that's probably a good thing for the very largest ones, those that would pose a systemic risk to the economy. But it's going to be a while before that's fleshed out enough to know what to think of it.
All right. We will leave it there. Bob McTeer, so nice to have you on the program. Thank you.
Thank you, Maria.
Robert McTeer joining us.